Hello everyone, I hope you're doing well. Today we're going to learn how to identify supply and demand zones on the chart. And I've also brought you some live market examples, so before anything, like this video and subscribe to my channel. And stay with me until the end of this video. In general, there are 4 structures in the market that help us identify supply and demand zones. 2 structures form at tops and bottoms, and 2 appear during upward and downward trends. Structure 1, the price moves upward, then after a bullish leg it consolidates for a while. And finally a bearish leg happens. This structure is called rally base drop. And the base candles are considered as a supply zone. Structure 2 is the exact opposite of the first structure. The price drops, consolidates for a while, and then a bullish leg occurs. And this structure is called drop base rally. We consider the base candles here as a demand zone. Identifying these zones doesn't mean we can immediately enter a trade when the price touches them. We need confirmation for our trades, which I will teach you in a future video. Structure 3. The price drops with momentum, then rests and forms a base, and continues its bearish leg. This is called drop base drop, and the base candles are considered a supply zone. On the pullbacks, we can look for sell opportunities. Structure 4. The price makes a bullish leg, then consolidates, forms a base, and continues its bullish move. This is called rally base rally. And the base candles are considered a demand zone. On the pullbacks, we can look for buy opportunities. To find these structures, we use range candles and momentum candles, which I've already taught you. Let's go to the chart to see some examples. But keep this in mind. First, you should always check the weekly and daily timeframes to understand the overall market structure. Then mark these zones and evaluate how much each one is worth risking, or what targets you can expect from each zone. Let's go to the chart and I'll show you some examples. I'm on the 4-hour time frame. As you can see, the price moved upward, formed a top, and then dropped. This range candle that was formed just before the drop is considered a supply zone. And this base candle between the 2 bearish legs is also considered a zone. But since gold's higher time frame structure is bullish, when the price reaches these zones, I'll only enter trades with confirmation, and I'll take profit at the right time because I know the price may invalidate these zones. The next zone is these base candles, and as you can see, they form a rally base rally structure. The price reacted to it twice and eventually moved lower. It then reacted to this broken top and moved. Look at this 4-hour top. We consider it a supply zone. As you can see, the price formed a range candle upon reaching it. Even within this range candle, we could have taken 100 pips profit. Eventually, it got broken, and a close above it happened. That same range candle created a rally base rally. And as you can see on the first touch, the price grabbed the liquidity below it and moved upward. Then it hit this 4-hour top and dropped. Again, it reacted to this demand zone, but eventually passed it sharply and the zone lost its validity. After breaking the support, it turned into resistance. And as you can see, the price reacted to it twice and eventually invalidated it. Let's look here. On the 4-hour, the price formed a bottom and a top. It touched this bottom again and moved up, engulfing this top. On the 4-hour here, between two bullish legs, we see a range candle that the price pulled back to once and moved up again. Then again, the price consolidated here and made another bullish leg that broke this top. We consider this consolidation or pause in price as a demand zone. Then the price moved up again. And here, between two bullish momentum candles, we see a range candle. The price touched it once, grabbed the liquidity below it with a shadow, and moved up again. Now here, near the top, you can see these range candles, and the price passed through them sharply. In this situation, we can sense that the selling pressure on gold is increasing. And as you can see, a drop happened, and even the lower demand zone got invalidated. And these two zones of price rest and consolidation also showed good reactions when the price reached them. I tried to show you many examples so the concepts become clearer. I hope you stay successful and profitable.